What's going on, everybody? Jeff here. Welcome back to the channel. All right, guys, quick video for you today. I hope this one helps you. It is sparked by a lot of people reaching out to me inside of the group and a couple people on Twitter as well, talking about having a red day today. How do you know when a trend is going to be established? How do you know when the stock is going to reverse? And there's a couple things I want to break down for you in this video. So let's get right into it. I hope, like I said, this really helps you guys. So first off, I was taking a look at the algorithm, and if you look at SPY, it triggered 3 longs today. You know, we jump over here to QQQ. I think it was the same thing. Actually, I think it triggered 4 longs. A little bit late. Didn't want to, kind of catch that chase. One of the thesis that this algorithm was built on is to never chase, always to buy the pullbacks. Okay, I will tell you guys that this will be released very shortly for you. I'm still really trying to finalize it, okay, in order to make this be something that, like I said, can really, really help assist you in your trading, okay? Like I said, nothing is going to do the trading for you. You still have to put in some work, but I'm really hoping this can help, assist you for you. So people have reached out, Jeff, how do you know when it's going to be a trend day? How do you know it's going to reverse? It's very, very simple, okay? And I'm dead serious when I say this, guys. You don't know, okay? You do not know coming into the day when it is going to be a trend day, when we're going to have news that randomly gets dropped at 1 o'clock in the afternoon and we reverse, when we hit some resistance in the prior days and we end up pulling back. You don't really know. You have to kind of play these things from zone to zone, from level to level, which I clearly have written out here. A couple things I will point out to you. Whoa, that was weird. A couple things I will point out to you, okay? And I played Qs today. Why did I play Qs today? Well, I really like this setup. As you can see, I had my purple, demand zone that we broke over. We kind of based and held. We could have clearly rejected off of this 317, which was another, demand zone that we rejected off of, previously, and could have continued to sell off. Could have been a morning top rejection. Could have continued to go down. The point of the matter is you take a position based on an educated, really thesis that you have, okay? It based over this demand zone for me, we saw these wicks continuously getting bought up. CPI came in a little bit cooler than expected. Producer price index came in a little bit cooler than expected. Therefore, I take a position, I scale out of it when we get up here, and I have my stops. I have my stops down here, giving me the ability, okay, to be able to collect on this movement that continues to the upside, or also just protecting some small profit and cutting out and cutting it when we get back down to, somewhere around this price range to where I can still ensure that first scale is in profit. I never look at it that, hey, listen, I should have scaled everything here. If it ripped back, I would have made more. I should have held everything. That kind of mindset is not going to get you very far in trading. You have to have a set of rules, okay? If this happens, then I do this. Very, very simplistic, and you have to follow those rules. You cannot fluctuate or veer away from them. You have to back test them when you make these rules, and you have to be able to follow them. Okay, scaling out a position will always help you be able to stay in a trend. But even more important, okay, is when people try to consistently fight the trend. Now, there's a couple things here, okay? And if you take a look, I remember, looking at SPY, and I commented to a couple people inside the group. I said, listen, very early on, once we kind of came up here, all right, we rallied, then we based again. I said, this is a perfect scenario again, where it's like they're trapping shorts and we're going to continue to trend higher, okay? And the reason why I say that is because a couple things. One, these candles were still very small relatively. The volume was just a little bit on the low side, but over experience by watching price action for such a long period of time, okay, you're able to get a feel for how the market is moving. And clearly, once we broke out, once above that higher resistance, which is around that 411, we came up, we slightly back tested it very, very quickly, and we just continued to grind all day long. All right. Stop trying to time a reversal. Okay. Stop trying to top tick a reversal, because what happens is, and here's the thing, and I've said this to everybody or somebody inside the group, there are people that play reversals and they do great. Okay. And because, the market really only trends 20% of the time. The other 80% of the time, it's sideways chop. And if you have a set of rules, okay, that are very strict, and you play reversals only, You would have taken probably 2 or 3 losses today and you would have been done for the day. It would have been a red day for you, but that's fine because the next day you don't try to catch a trend. You still do the same thing and catch reversals. But too many people continue to just cherry pick. Oh, let me buy puts. Oh, it's got to come down. It's lower. It's too high. It's overextended. It's got to come down. It's and so forth. And there's no indication whatsoever, okay, that is showing you that the market is rolling over. One of the biggest things, today was Apple. It popped really hard out of the open. I have this yellow line here, which is the previous day high. It kind of came down and it just continued to rally the entire time. And that was an indication that, listen, if Apple's moving very strong, considering it's such heavily weighted, the market is going to go with it. These are just a couple EMAs. I use the 9, the 21, and the 200. The 200 kind of forms as like a bull bear bias. And what these EMAs, do for me is it helps keep me in a trade. As you can see here, these are very smooth and they continue to just move up to the upside. Even though I had this little red candle right here, okay, this is the 5-minute. I normally trade on the 3, but this is the 5-minute just to show you guys. We didn't really roll over. There was no sign that, listen, we were rolling over. We're getting back down to this area. We're getting below that 409 area that was heavily bought up. Buyers got exhausted. I'm not interested in trying to top tick and bottom tick because eventually, more times than not, actually, in my opinion, you're going to get burnt by that. So if there's 2 things I hope you guys get out of this video is, one, stop trying to, time things, guess things, play these reversals before they've even shown you any indication that a reversal is going to happen. And also stop letting, trade, when you get into a trade where you're getting out of it too quickly. Okay. There's an old saying that says, oh, you never go broke when you're taking profits. And guys, this might be very contrary, but I think that is a bunch of bullshit. And the reason being is because when you stack up these 10%, 8%, 7%, wins, especially with options, okay, unless you're taking 5 or 4 or 5% losses, you're going to get burnt. And I've seen it time and time again. Someone comes to me and says, listen, I need help with my trading. I have a 75% winning, win rate over the last 200 trades. My average winner is, 10%, and my average loser is 40%, or my average winner is 7%, my average loser is 30%. And therefore you're not profitable because you're getting out of a trade, too quickly. Learn to scale out of a trade. Stop looking, solely focusing on that monetary value. Focus on the process. The profits will follow. Okay. Scale out at the next resistance, set your stops, and give it the ability to be able to run. Even if it's just, if you're only taking 2 contracts, then try to let one go. If you're taking more than one, then really try to let one go. Don't look at it that, hey, if I sold both of them here, I would have made more. That is a horrible mindset to have when it comes to trading. So guys, I hope this video helps you at least a little bit, gives you a different perspective. All right, if you're a red today, don't worry about it. Just understand, try to get a better feel when these trend days happen. Stay away from them. If you are a reversal trader and you're trying to play that, that's no problem. Like I said, the market moves sideways most of the time and you're going to have your days. All right. Lastly, I will update everybody make an entire video on the algorithm, how it's built, how to have access to it. Okay. And everything that has to do with that very shortly. So guys, that's it for this video. I'll see you in the next one.